know that if something can't go on forever, it will end. We are doing something that is unsustainable, and it has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially, you just give up on it.
What if I told you that Warren Buffett just issued his most serious warning ever, and no one is paying attention? The U.S. government is sleepwalking into disaster. Buffett sees a $37 trillion ticking time bomb of debt spiraling out of control, which might just threaten everything you've worked for: your savings, your retirement, your future. But what exactly is Buffett seeing that no one else is talking about? And how close is the U.S. to crossing that line of no return? We're about to show you exactly what's going on and what you can do about it before it's too late.
We're operating at a fiscal deficit now that is unsustainable over a very long period of time. We don't know whether that means 2 years or 20 years, because there's never been a country like the United States. But you know that if something can't go on forever, it will end, to quote Herbert Stein, a famous economist. And we are doing something that is unsustainable. And it has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially, you just give up on it. I wouldn't want the job of trying to correct what's going on in revenue and expenditures of the United States with roughly a 7% gap, when probably a 3% gap is sustainable. And then the further away you get from that, the more you get to where the uncontrollable begins. And I think that it's a job I don't want, but it's a job I think should be done. And Congress does not seem good at doing it.
You just heard Buffett clearly say, America's deficit is dangerously unsustainable. But what exactly does that mean, and why is he sounding the alarm now? Imagine earning $50,000 a year, but spending $65,000. You're borrowing that extra $15,000, piling up debt fast. You might manage it for a bit if banks keep lending, but sooner or later, you're headed for serious trouble. That's exactly what America's doing. The government consistently spends far more than it earns from taxes. This difference is called a fiscal deficit. Historically, the deficit stayed small enough to manage comfortably, like a small monthly credit card payment. But today, it's about $2 trillion every year, more than double what Buffett calls sustainable. Buffett measures deficits as a percentage of the overall economy because it quickly shows if a country lives beyond its means. A small deficit is manageable, like borrowing a little when your income is high. But a big deficit, like today's 7%, is like borrowing massive amounts your income can't support. And there's no major recession or global crisis causing this huge spending. It's happening during relatively good times, making it even scarier. Looking forward, America's deficits aren't short-term. Over the next decade, the U.S. is projected to add another $22 trillion to its debt. To put that in perspective, after World War II, U.S. debt reached about 106% of the economy. Right now, it's around 100%, and on pace to surpass that World War II peak within a few years. If nothing changes, debt could reach nearly 130% of the economy by 2035. But it's not just the amount of debt, it's what borrowing is starting to cost us. Imagine maxing out your credit cards until your monthly interest payments exceed your rent, and your rent keeps rising. That's exactly what's happening now with U.S. debt. Interest has become America's second largest expense, only behind Social Security. In 2024, interest payments will reach nearly $900 billion, more than the entire defense budget and Medicare. To put it simply, America spends roughly $2.6 billion every single day on interest alone. And here's the scary part. These interest costs will nearly double over the next decade, hitting $1.8 trillion per year by 2035. By then, over 20 cents of every dollar will go directly to interest payments, instead of school, infrastructure, or innovation. Why does Buffett call this unsustainable? Because borrowing at this rate creates a dangerous cycle. The more you borrow, the higher your interest payments become, and the more interest you owe, the more you need to borrow. It's a vicious spiral that's difficult and painful to stop. This year, Moody's, one of the agencies that rates how safe it is to lend money to governments, downgraded America's credit rating. Credit ratings are like credit scores for countries. They tell investors how safe their loans are. For decades, America enjoyed a perfect AAA rating. Now, Moody's dropped it to a AA. That might seem minor, but it signals something important. Investors now see lending to America as slightly riskier. Higher risk means lenders demand higher interest rates, making debt even more expensive and digging an even deeper hole. And that's Buffett's real worry. Losing credibility means losing trust. Once markets doubt America's financial promises, borrowing gets tougher, interest payments balloon faster, and eventually something breaks. You might think that if things were this serious, someone in Washington would fix it, right? Buffett's answer, not only is nobody fixing it, the political system itself is making things worse. And it's got nothing to do with bad intentions, and everything to do with how power actually works.
I think that bureaucracy is something that is amazingly prevalent and contagious even in our capitalist system, and that big corporations, overwhelmingly, most of them look like they could be run better. I'm sure Berkshire does in many respects. And and government is the ultimate. So it really doesn't have any checks on it, and that's why it scares you to some extent about what the future of the currency will be, because they can print currency, and if you have people that get elected by promising people things, and that doesn't mean that they aren't sincere about all kinds of items, but there's no politician that says to anybody that, at least if they have money, that, I really think you have bad breath, and if you don't mind, would you step over away from me? It just doesn't happen.
Buffett's warning here isn't just about money. It's about power and why the political system itself seems rigged against fixing this crisis. To understand this clearly, we need to look at what the U.S. government actually spends money on. Most federal spending isn't wasted on unnecessary luxuries. It goes directly to pensions, healthcare, defense, and interest payments on debt. In fact, nearly half the entire federal budget covers just two categories: Social Security and healthcare programs like Medicare and Medicaid. Add interest payments, and these three areas drive about 2/3 of all future spending growth. Here's the catch. Congress doesn't even need to approve this spending each year because decades ago they guaranteed these benefits by law. Unless they actively change those laws, the spending happens automatically. Think of it like promising to support your kids financially as they grow. Initially, the costs seem manageable, but every year your kids grow older and their needs, clothes, food, education, get more expensive. You can't just stop providing for them. The commitment was made years ago, and the costs rise steadily over time. Right now, around 10,000 baby boomers retire every single day, and they're all legally entitled to pensions and health care. Even eliminating defense spending entirely wouldn't solve this structural problem. The gap between government spending and tax revenue is built into the system. Taxes currently bring in about 17% of the economy, while spending exceeds 23%. That gap might seem small, but year after year it adds trillions to the national debt. But this isn't just a math problem, it's political. American politics reward making promises, not breaking them. To reduce the deficit, politicians must make deeply unpopular choices, either cutting essential programs or raising taxes, both political poison. Retirees represent one of the largest voter groups. Any politician who proposes cutting pensions or health care risks immediate backlash. Even modest reforms, like gradually increasing retirement age, become campaign targets. Lobbyists fight any cost-cutting healthcare reforms. Politicians find it easier to promise more benefits or lower taxes, especially since elections happen every few years. Meanwhile, debt problems unfold over decades. If your job depended on winning popularity contests every 2 years, would you risk cutting grandma's pension or raising taxes on voters? Probably not. Instead, politicians kick the can down the road, hoping someone else deals with it later. So we have rising debt, spiraling interest costs, and no political will to solve it. But there's a darker way this could unfold, and Buffett has seen it before. When spending cuts and tax hikes become politically impossible, governments quietly take another route, and that's Buffett's next big warning.
I think the problem of how you control revenue and expenses in government is the one that is never fully solved and has really hurt dramatically many civilizations. And I don't think we're immune from it, and we've come close to it. Paul Volcker, kept that from happening in the United States. But we came close. We've come close multiple times, and we've still had very substantial inflation in the United States, but it's never been runaway yet. And that's not something you want to try and experiment with because it feeds on itself.
Buffett's point is serious. He's not predicting immediate disaster, but he's calmly highlighting the fuse that's already lit. A debt spiral driven by political deadlock, rising interest costs, and fading market trust. He's seen these signs before and knows how quickly things can unravel when nobody acts. So what exactly is a debt spiral, and why does Buffett find it so dangerous? Think of it like maxing out one credit card just to pay interest on another. Every month your debt and your interest payments grow. Soon you need another card just to cover those higher costs. It quickly spirals out of control. Governments can face the same problem. When a country continuously spends more than it earns, it must borrow the difference. But heavy borrowing makes investors nervous, prompting them to demand higher interest rates as compensation. Higher rates mean bigger interest payments, creating larger deficits, forcing even more borrowing. This dangerous loop, called a debt spiral, can rapidly become impossible to escape. Currently, America borrows around 7% of its total economy annually, more than double what Buffett considers safe. Interest payments alone are already around $900 billion per year, soon to surpass spending on defense or Medicare. Without a major change, these payments could soar to nearly $2 trillion annually by 2035, consuming nearly 25 cents of every tax dollar. If that sounds extreme, consider what happened to Greece. In 2008, Greece already had large debts, spending far beyond its means. Investors grew worried and demanded higher interest rates. This drove up borrowing costs, forcing Greece to borrow even more. Within months, interest rates on Greek debt surged past 10%. Investors soon stopped lending entirely, and Greece was shut out of credit markets. The only way out was a painful international bailout requiring pension cuts, higher taxes, and triggering a severe recession. Greece learned a harsh lesson. Once investors doubt your debt management, borrowing costs skyrocket and the crisis quickly spirals. This is exactly what Buffett warns America must avoid. But debt isn't the only risk. Confidence matters just as much. What happens if investors lose faith in America's ability to manage its debt? To see how fast confidence can disappear, look at Britain in 2022. That September, the UK announced large tax cuts without explaining how they'd pay for them. Investors panicked, fearing reckless borrowing without a clear plan. Almost immediately, they dumped British bonds, causing borrowing costs to spike from around 3.5% to over 5% within days. The British pound plunged, and the UK faced economic collapse. The Bank of England intervened urgently, buying massive amounts of bonds to stabilize markets. Britain's government reversed the policy, and both the Prime Minister and Finance Minister resigned. This wasn't some unstable, developing nation, it was Britain. And yet, a single misstep erased market confidence and triggered chaos practically overnight. Could the US really face something similar? Well, America does have some advantages. Unlike Greece, which borrowed in euros, a currency it doesn't control, America borrows exclusively in its own currency, the US dollar. That gives it more direct control over its debts. The dollar isn't just America's money, it's the world's favorite currency. Countries use it to trade oil, buy goods, and store value. Because of that, businesses and governments around the world want to keep their savings in dollars. And the safest way to do that is by buying US government bonds. And here's why that matters. When lots of investors want to buy your debt, you don't have to offer high interest rates to attract them. It's like having a long line of people eager to lend you money. You can borrow more and do it more cheaply. That steady demand gives the US more breathing room. It means America can run deficits for longer without triggering a crisis, at least for now. But here's the catch. This doesn't mean the US can borrow endlessly. If America keeps piling up debt, or if inflation stays high for too long, even foreign investors might start getting nervous. They'll demand higher interest rates to lend money, making America's debt problem even worse. Moody's recent downgrade of America's credit rating in 2025 was exactly that, a warning sign. It was a clear signal from investors that they're watching closely and patience is limited. While it's tempting to think the US can keep borrowing forever, Buffett reminds us that's not the case. Eventually, if investors begin to doubt America's financial discipline, especially if debt keeps ballooning, they might demand higher interest rates, just like they did with Greece and Britain. And if that happens, the cost of borrowing can spiral out of control much faster than anyone expects. And when market confidence breaks, history shows how quickly things can fall apart. So how do you protect yourself and your portfolio from these kinds of risks? Buffett's advice hasn't changed. Ignore short-term noise. Understand what you're investing in. And buy great businesses at prices well below what they're really worth. Simple enough advice, right? But the truth is, identifying truly great businesses and understanding their real value isn't always easy. That's exactly why we created Investor Center Research. It's a monthly stock research service designed specifically for long-term investors who want clarity, confidence, and peace of mind. Each month, we carefully break down one exceptional company, applying the same principles and frameworks that have made Buffett one of history's greatest investors. You'll see exactly how we're evaluating businesses, what makes them special, and why they could be worth holding for years, even decades. You'll get full access to our model portfolio, seeing exactly what we're buying, what we're holding, and why. Here's the important part. We're launching soon with just 250 founding member spots. Founding members will lock in our lowest ever price for life. If you want early access and the first shot at becoming a founding member, join the waitlist today. You'll get a 6-hour head start before we open to everyone else. And as a special thank you for joining today, we'll send you our exclusive guide, Warren Buffett's Investment Checklist. It's a practical tool built from Buffett's core investing principles, designed to help you spot durable, undervalued businesses with long runways for growth. Click the link in the description below, grab your Buffett Investment Checklist, and secure your spot on the waitlist. Thanks for watching, and I'll see you in the next one.